Now we're going to add another word to our vocabulary, and that word is base. Now, a base is an area of price movement where there's a little bit of consolidation after an initial move. A base is almost always the first stage of the markup cycle in a stock. When I see a stock that I already believe is in accumulation, that then peaks and bases, that's a trade that I'm going to take if I have enough risk capital available to take it. If I'm looking at 3 or 4 different charts and I see an accumulation phase followed by a base, and of those 3 or 4 charts there's only one that has the base, I trade the base. What is a base? It's another well-defined period of high and low prices. We're going to look at some on some charts, and they're just going to leap off the page when you see them. The on-balance volume has already spiked once, but it will tend to drift sideways and sometimes even slightly down during a basing period. Initial bases are frequently followed by a shakeout, and I'm going to show you on a chart what a shakeout is, but a shakeout is a manipulation by the market makers and the people who control the price of stocks designed to shake smallholders out so they can accumulate more stock before they run the price up. Now, I have been shaken out of stocks before, and it can be frustrating, but when I see a shakeout followed by a base, I get excited because that is almost always going to be one of the best trades you can possibly take. Because traders tend to place their stop-loss orders close to bases, bases are frequently subject to stop runs and shakeouts. Let's take a look at a chart. Okay, so now we're looking at that same chart that we looked at before, except this time I have a little oval highlight around the base. So here we have this clearly definable period of price activity that I believe is accumulation. Then we have this little dip, which I believe was a shakeout, followed by a quick rise in prices, and then another consolidation period. And what's interesting about this period here that I'm saying is a base is because it followed this shakeout, I was so enthusiastic about this stock, I went ahead and bought it in the base rather than wait for the breakout. Typically, we like to buy stocks as the price is moving higher. We place stop orders that will only be activated as price moves up through them. Most of the time, that's how I trade. But when I see several years of accumulation, followed by a shakeout, followed by another base with a couple of smiles in here, and we're going to look at the smiles, but see how that chart is just grinning at you? It's saying, please come buy me. There's another little shakeout here with a little bit of smile, and then another consolidation area. There's actually a base inside of this base. This chart is screaming buy me. So, as you can tell, I did. I bought 2,000 shares right in here at 65 cents a share. When this chart was actually copied to prepare these slides, the price of this stock was sitting at $2.49. As of this recording, I'm still in this stock. I'm not recommending you buy it. Opportunities like this come around every day. There's no reason to chase a price. In fact, chasing a markup move is probably the wrong thing to do. You want to catch the markup move in the first 10 or 15% of the move. Okay, now again, we're looking at the same chart. I'm using this chart because it is such a classic example of exactly what we're looking for in this course, that I want to burn it into your mind that when you see all of these things moving together, that's when you have the best opportunity to have a massive explosion in price. This orange line here represents the area where many traders will place their stop losses. Now, I didn't buy this stock during this time period of accumulation. I was waiting to see if there would be a rise. However, many people did. And as you'll see inside of this little circle here, just before the market manipulators took this stock up, they wanted to make sure that they could accumulate as much stock as possible. So in order to do that, they sold into a weak market, pushing prices down, which then activated all of the stop losses that would be sitting on that orange line. Those stop losses create selling activity, which brings lots of stock into the market that otherwise would not be there. The market manipulator then buys up all of those extra shares of stock, and the buying activity at that point, if it is a real shakeout, prices typically only go down for a couple of days and then immediately reverse. The whole point of a shakeout is not to crush the market, but just to get as much stock as possible before you go back into the accumulation phase, preceding the final breakout into the markup phase. And that's exactly what happened here. Now, if I was in this stock, I would have had my stop loss order placed probably somewhere around that orange line, which means I would have got caught in the shakeout period. So I probably would have lost $400 or $500 depending on how much money I had in it. I normally risk anywhere from $500 to $1,000 per trade. There's plenty of trading activity, and I prefer to take smaller bites rather than larger bites. But in your account, you can do what you want. If you don't want to have 50 open positions at any one time, trade $10,000 per bite. Depends on how big your account is. Anyway, this shakeout period would have stopped me out, and I would not have been upset. In fact, I would have been excited, because when I see a shakeout followed by accumulation, that tells me the move is going to be good. And I probably would have bought back into the stock after it made a new high. But I didn't buy down there. I bought up here, so I didn't get caught in the shakeout. Okay, now we talked about buying smiles, and so I just wanted to throw some smiles on this particular chart so you can see what they look like. Many times, smiles and frowns will show up both in the price activity and the volume activity, as you see here. I threw up a little frown right there. There's a frown, and what did the price do? It dropped. There's a frown and a frown, followed by falling prices. We sell frowns and we buy smiles.